Welcome back to another edition of Special Situations Investing with Greg. This week I will be talking about a SPAC, Pershing Tontine Holdings. Check it out. Hey everyone, welcome back to another edition of my YouTube channel on Special Situations Investing and my personal investing practice. As a quick disclaimer, this video is for educational purposes only. Any companies that I mention in this presentation are discussed solely for illustrative purposes. Discussing such companies and the specifics about them is to help educate me and educate you about certain special situations. It is not a solicitation to purchase them. I recommend that you conduct your own research and identify why you might want to own the company yourself prior to your committing of any funds. I also recommend that you seek the services of a financial advisor that has considered your personal situation as your fiduciary. And then finally, may your education here grow your knowledge, improve your personal investing performance, and give you the confidence to take control of your future. Thanks a bunch for watching. Now on to the video. Investing mutants. I'm really excited about this one today. Today we are spending some time talking about Pershing Tontine Holdings, which is a SPAC that is post their acquisition phase. They had some issues with their investment, and I wanted to spend a little bit of time talking about it. So this idea actually came from Jelani Taters, another one of the subscribers on this channel. If you have your own idea of an investment that you want me to take a look at, feel free to share with it. I'll either comment in the section my perspectives on it, or I will find an actual video on this. And this one was so interesting that I thought that it would be worth a whole video on. But before I get into that, let's spend a little bit of time just talking about what a SPAC is. So SPAC stands for Special Purpose Acquisition Company. And when we think about special purpose acquisition companies, they are an opportunity for someone to pool their funds with an investor or a principal, and then they go ahead and that principal goes out and finds a company that they either want to bring public or they want to purchase with the funds that have been pooled into that. So it's a private to public equity transitions typically, and it's just kind of fascinating to observe. Another name for a SPAC is a blank check company. And blank check companies or SPACs have been around since about the 1990s, as far as I can tell, and they may have been around longer than that, but there has been a significant amount of investor interest in SPACs just because of the nature of the setup. What happens with a SPAC is you put money into the company at the net asset value. So basically you buy it at, say, $10 a share. And then you go ahead and wait, usually up to about 24 months, to go ahead to see if they buy a company that you're interested in. When they create that opportunity to buy that company that you're interested in, then you can go ahead and either pull your cash out or keep your money invested with the company that is purchased. Another interesting portion about SPACs is they're usually attached with a warrant that allows you the right to purchase the shares at a set price within usually about 5 years. And so the long-term warrant is kind of like a long-term option. It's just not leveraged like an option is, where one contract represents 100 shares. Is just usually a 1-for-1 share. When I think about SPACs, I like to think back to Maurice Schiller's works, and one of the things that I learned as I read through his books is that you need to think about a special situation as why someone might be on either side of the transaction. So why would someone participate in a SPAC, and why would someone be interested in marketing a SPAC out to the people? And so let's just look at that for a second. So the SPAC allows a hedge fund manager or a manager that wants to go out and acquire businesses the ability to leverage the amount of money that they can basically command in the acquisition of a new company. So in this case, Tontine Holdings, you have Bill Ackman. He goes out and he wants to purchase a company that's over $1 billion. And so he puts out some of the funds as the principal, but other people are able to invest with him. A company that is taken public through a SPAC has a little bit of a different setup than a normal IPO. Typically, in an IPO, there is a moratorium on sales of the shares in that company for 90 to 180 days. Most of the time with a SPAC, the principals in the SPAC investment, they don't have that benefit. It's usually longer than that 90 to 180 days. So often the principals' money that they put into this, they have an advantage, or they have the motivation to buy something that is better for the shareholder. The third reason why SPACs are used is that the warrants provide significant upside to the interested investors, and although not always a way to make a quick buck, sometimes those warrants can be held and in the anticipation that the company is going to do really well over time. In my opinion, if you're able to buy a SPAC typically below or a significant amount below the net asset value, this would provide a very similar special situation to like a tender offer, where you know how much money that you are expected to get for the company, and you're able to and then you have the option to either keep the company's shares upon execution of the IPO, or you're able to take your cash out. And so kind of a risk-free situation with your funds if you're a shareholder. The warrants, on the other hand, aren't necessarily the same. The money that you put into those can be lost, and that'll be something that we discuss extensively in this video. My final thought on SPACs as an investment is that this is an investment where you are betting on the jockey, not necessarily the horse. And so the jockey is basically the person or the group of people that are the principal, that you find that you agree with their values or whatever they're planning on investing in. You're pretty confident that they're going to be doing their best to take care of your interests. Not always has the jockey protected the interests of the individual SPAC investor. I think that Mr. Ackman in this case is one of the better SPAC principals, where he's not, his alignment with your concerns is a little bit better than most, and we'll get into that discussion. If I take the analogy a step further, though, with the jockey versus the horse, when you buy into the SPAC pre-announcement or pre any IPO that they're going to create, you are essentially buying the company without knowing what horse they're going to, buying the rights for the jockey without knowing what horse they're going to be riding, and you may or may not like the horse afterwards. So there's a bunch of different SPACs that have gone through. I've invested in some of them throughout the years. Shift being the most recent one. If you want to see my videos on Shift, you can take a look at those. With that as the backdrop, let's take a look at Bill Ackman's SPAC, Pershing Square Tontine Holdings, or PSTH. When I saw this, I had to have some fun with it. PSTH, if you put them right together, sounds like something that my daughter would say to me when she's angry about something that I'm asking her to do. Hey, daughter, I'd like you to go out and, clean the dishes. And she's like, psh, psh. That's kind of what comes to my mind when I see this. So it could be kind of fun to think about it that way. It's not the actual ticker symbol, but I'll be calling it PSTH as we go through this. And if I jump into that, just because I found it humorous. So let's look at some of the history. Some of the history for Pershing Square Tontine Holdings. Earlier this year, PSTH attempted to purchase Universal Music Group, the largest music group in the world that had rights to songs and stuff like that. And this is a non-traditional IPO. Instead of, even for the SPAC industry, investors would get their portion of UMG, and then later a cash payout for the difference of the outstanding assets that were still in the SPAC post IPO. So in this case, it was $14.75 per share of equity in Tontine Holdings IPO process with UMG, and so they would go ahead and get access to UMG. And then the other side of it is that they would get $5.25 a share in cash as a cash payout post the transaction. However, when the SEC looked at this transaction, they questioned whether or not PSTH was structuring the deal properly. As a result, PSTH had to determine a new acquisition target, and the deal did not go through the SPAC. After the failed deal, a shareholder lawsuit was then levied against PSTH and the firm based on the fact that they weren't able to follow through with what they'd done. And this lawsuit has the potential to impede any future investing from the company as a time. And again, as we talked about back in what a SPAC is, they usually have 24 months to commit those funds to an investment. So basically the clock is ticking, and now we have a lawsuit that prevents would-be companies from entertaining an overture from PSTH. In order to save the investment that Mr. Ackman had on this, he is also petitioning the SEC to create a new SPAC-like entity that he has dubbed the SPARC. And so, unlike a normal SPAC where you put your money into a 2-year holding investment firm and then they go out and they buy the company and then you're able to cash out the cash or get out the cash at the end if it's lower than net asset value. The SPARC would be the other side around, where basically you have the right to purchase, but you don't have the cash held in reserve for someone like that. Now, I can see this as being a way that could create opportunities for oversubscription where people could really make a lot of money, but that's beyond the scope of this video. So if this SPARC entity is created, this could be a really, really fascinating investment vehicle and might be something to pay attention to in the future. In order to get the structure change required under the SPARC investment, Mr. Ackman has to actually get an SEC change to their filing requirements. And so this is to change it from an opt-out to an opt-in structure is a complete change for the regulatory agency. It is, in my view, what I think would be a better opportunity. But again, like I said about oversubscription privileges, I could definitely see where this could be taken advantage of by some of the larger investors out there. The inability to complete the transaction with UMG looks like it's basically put Mr. Ackman into doing some damage control, and I don't fault him on this, and I don't want you to think that I'm criticizing him. In fact, I have quite a bit of respect for the fellow, but it just seems that the SEC questions that are associated with the failed merger with the inability to complete the transaction with UMG and the subsequent shareholder lawsuit has basically required him to go away from being forward-thinking at the moment and protect the capital that Pershing Square Holdings has committed to it, and in this case it was $65 million. Any investor that's interested in PSTH, they should understand some of the things that are going on, and these things come from the investor's letter of August 19th, 2021 that you can take a look at Pershing Square Tontine Holdings website. I'll make sure that there's a link below. So the first one is that Ackman's funds, under Pershing Square, they have committed about $65 million into this investment, and so they're interested in participating in it, and they're interested in not losing that $65 million. that's kind of a drop in the bucket to the actual money that he has in assets under management through Pershing Square, but it is something that is a significant amount of. I mean, not everybody can walk around and say, "Oh yeah, 65 million is not a big deal," but in the grand scheme of things, with a $10 billion portfolio, I don't know if it's as big of a deal for him, or over $10 billion portfolio. I don't know if 65 million is that big of a deal to him, but still, it's more of a reputation thing with this than it is a monetary thing. The second thing is if SPARC is not approved, then the warrant holders just expect that you're at the point where you're going to be losing 100% of your funds outstanding. If SPARC is approved, if you own shares in PSTH prior to that, then you'll get your cash back, but you also have the rights to participate in SPARC and any investment that they have. I find that might be the safer way to go in this case. Because investing in a SPAC is betting on the jockey, let's take a little bit of time looking at Bill Ackman as an investor. So Bill Ackman, Harvard Business School graduate, he spent some time doing investing with Gotham funds back in the 1990s. I think I wasn't able to make the connection between him and Joel Greenblatt, but I question whether or not he has had some of that as his lineage of learning how to invest in special situations. And if you look at the holdings that he has now, there are some that were parts of spin-offs, and so he does seem to, even at the multi-billion-dollar size of a investment firm, he still has focused on very specific types of investing. The other thing that he's also done is that he's kept his long positions to only seven. So he has about 8% in his smallest position per the June filing with the SEC. And so we're looking at somebody that has a substantial portion of his portfolio that could disappear if something goes wrong with one of those investments. And so he's done value investing in the true traditional sense, where if you know that you've got a good deal, you buy the whole thing, or you commit as much funds as you think is necessary in order to really benefit from it. In my opinion, this is a pretty gutsy move to do with a portfolio of over $10 billion. Even Warren Buffett, some people say, oh yeah, he's only got 10 different positions in his company, but if you really look at it, Warren Buffett has a multi-billion dollar company, and he owns something like 80 different companies that are not necessarily traded on the public market. And so Bill Ackman is in that position where he's moving into the realm of someone like a Warren Buffett, and he has, he has kept himself very, very disciplined to be able to keep from purchasing more than 7 positions. Now, something to note, as a hedge fund manager, not always do SEC filings require someone to share any short positions or options trades that are associated with that. And so the other positions on his portfolio may not include that type of information, and it may you may not see the same types of returns. I did look at Pershing Square holdings over time, and I noticed something that usually happens with value investing, and this is something to note, that if you're new to special situations and stuff like that, is that you get returns in a lumpy manner. Like, you'll have a bunch of money in 1 year, and then things might just bump around with no up or down for 2 to 3 years. And the same thing has happened with me. Is I had years where I had hardly no change in the value of my portfolio, and then last year, due to everything that I've done through COVID and stuff like that, you guys got to experience one of those years where things went really, really well for me. Another thing, when we think about investing with the jockey, let's think about the insight that Bill Ackman had and the type of deal that he was looking for with his SPAC IPO. So Universal Music Group, they were going to buy approximately $4.1 billion of securities in UMG with only, and I find this astonishing, but with only $2.5 billion of the SPAC funds. And then the rest, that $5.25 per SPAC share, was going to go into the SPARC anyway. And so Mr. Ackman was already planning for a longer term of creating this opt-in versus opt-out structure for SPACs, and I think that it could definitely be a new opportunity if this is the way things go in the future. It could be really, really fascinating, a really interesting new special situation. He's basically creating them for us. I find that's quite interesting to look at. One final point, and that is that with this SPAC, if he creates the SPARC opportunity that he's talking about, and I know I'm getting all sorts of words in and out of here, but if he gets this SPARC created, there is one thing, he would revolutionize the way that investing in SPACs is done, because more people would be more attracted to this type of setup, in my view. At least I would, because then you don't have to keep your cash there available for the purchase, and you can use it for your own things on the side. And you still have the leverage, but you don't necessarily have to buy it all at once. I don't know how they would set this up. They might have to give you like a 30-day, 60-day time period to be able to commit funds to it, but could be very, very interesting to observe. That last point, that's actually something that causes me a little bit of consternation. I'm trying to understand why the litigation attempt against Pershing Square Tontine Holdings, because basically Mr. Ackman is developing an opportunity for the revolutionizing of the SPAC industry to be a little bit more favorable for an investor, and he's the one that's getting slapped with the litigation against him because of some activist attorneys and academics that apparently want to create. At least that's what his letter about this is talking about, and I'll make sure that is in the links below as well. So you might want to read both of them to kind of see what he's looking at. But it's just, to me, I think it's quite fascinating that he's trying to revolutionize the SPAC process, and then these people are saying that they want to also revolutionize the SPAC process, and so they target him, of all people, the one person that actually looks like he's trying to change things for the better for the small investor. Well, I don't know if he's specifically trying to do it, but the way that he's doing it with this is definitely his interests are aligned with the shareholders, in my opinion. So I thought about that, and part of the reason why I think that Pershing Square Tontine Holdings got targeted with this litigation is because, one, because they weren't able to follow through with the investment, then they're the largest one out there, and so that means that a lot of people are paying attention to this one, and that's part of the reason why they're the target, because they're the ones that have the most money on it. And they are also the ones that, if it's the biggest target and it's in the news and you got a big name attached to it like Bill Ackman, then you have all of these different things that make it so that if they are successful in their litigation attempt, then it could push the change that they have everything else in. And it turns into that story that everybody talks about that creates the change in the environment that you think about. I mean, it's 20 years later and I still see people that I know we're not investing that talk about things like Enron today, and that was something that I studied when I was in college. So I just find that was a very fascinating perspective to look at. In the spirit of full disclosure, I will admit that I am not planning on committing any funds to PSTH. If I were to commit funds, I would most likely commit them to the shares themselves, because it has the limited downside potential on it. It does not have nearly as much opportunity for the upside. And I can't say that I wouldn't participate in the warrants, but I just don't see the value there, and there's way too much risk involved with this, and I'm trying to find things that are less risky where I can protect my assets so that I can grow them quicker. In my view, a guaranteed or the opportunity to triple my money versus a loss is a total loss of money may not always be the best risk-reward ratio. However, you have seen that those of you that have watched for a while, you've seen that I put money into warrants with Garrett. And so it just depends on where I am and what I think with it. And there's just a little bit too much risk involved. If I was going to purchase PSTH and then buy some of the warrants on the side, I would look at them the same way I looked at Garrett, where I have the PSTH as kind of that solid, this is my base investment, and then I might have a small, very small percentage of my portfolio that's focused on this is the warrant or the options side of it. So that optionality could definitely create great opportunities for high returns. It's just I'm not prepared to participate at this time. One thing that may cause me to reconsider is, if Bill Ackman can demonstrate that he's able to get the SPARC entity rolling, and then with his investing style, I'm pretty sure that he's going to be pretty good at creating or determining whether or not something is actually the correct value for it. And so I could see him creating that SPARC investment, and maybe then it would be the time to purchase. It's just after the news, that's when you wouldn't be able to get nearly as much returns out of what you're purchasing at this time. PSTH lower than net asset value, and a corresponding warrant that's relatively low value as well could be interesting in my view. When I say low, I don't know. I don't know if I'm even going to commit a number on this, because I didn't feel like the information that I looked at gave me enough of a perspective to be able to make a decision on how much it should be. Although I do see the warrants as a risky opportunity, you should know that Mr. Ackman, he has committed that $65 million to the warrants, and that was part of Pershing Square Holdings' commitment as the principal into it. And so, even though that's a small portion of his portfolio, in my view, Mr. Ackman's August 19th letter demonstrates to me that it's not Mr. Ackman's investment amount that is put into this, the $65 million. I don't know if that's nearly as important as his reputation. And I think that that's what the whole investment letter from August the 19th is about. And if you wanted to take a look at that, if you haven't already looked at it, or if you want to look at it and you're interested in investing in Pershing Square Tontine Holdings, please take a look at it. I'm not interested in investing, but I think it might be worth it. I know that this was a long one, guys. We had lots of stuff to talk about this week with Pershing Square Tontine Holdings. However, thank you, Jelani Taters, for commenting, letting me know what your thoughts are, or letting me know not necessarily your thoughts, but wanting to know my perspectives on this. After digging into it, usually I like to just comment in the comments of my thoughts on a specific investment if it's something that I'm aware of. I had seen Tontine Holdings come up on some of my searches as I was looking through warrant exchanges and stuff like that, but I didn't get into it. In my opinion, this is the best part about doing this YouTube channel, is getting comments from you. So if you have, like Jelani Taters, you have anything that you want me to take a look at, you want me to learn about, you want me to give my opinion on, if it's not something that I can talk about immediately, I will definitely create a video on it. And I know that this is a long one, but I thought that you guys should take a perspective on this and just be aware. And it was a great way to educate myself and get better understanding about the SPAC world. So anyway, guys, thank you so much for watching. We will catch you next week.